MD, executive team, hardworking members of staff, distinguished guests, ladies and gentlemen, industry partners. It's now my pleasure to bring up here the man who will give the final seal of approval to the launch of this wonderful product, the Republic Wealth Trust. He has decades of experience in the financial sector, and ahead of taking up this role in public service was very key in the private sector. He's identified very heavily with his role as Executive Director of DataBank in charge of asset management and other portfolios that he's held over the years. Away from what he does on the board tables and all of that, he's also a man of God, a seasoned one at that, and he leads a flock who are highly inspired, and we're grateful to have him here this afternoon. Distinguished invited guests, ladies and gentlemen, with a big round of applause, please help me welcome the Executive Director, the Director General of the Securities and Exchange Commission, Reverend Ugbami Tete.
Good evening to all of you lovely people out there. And with your permission, I will stand on existing protocols and give a few remarks. I don't have a prepared speech because I want to speak to the people who are here for this lunch. And let me start by congratulating Republic Investment for this innovation, adding another product to the range of products that they already have. I think we had Madeline outline the products they have. And indeed, I think it's a fact that when it comes to collective investment schemes, it really started with Republic Investments when they introduced their unit trusts and then their REITs many years ago when I think I was an analyst working somewhere. So I think we can give a round of applause to Republic Investment for the pioneering role that they have played. And when I got the letter inviting me to this launch, I was quite excited with the theme, and that was in the invitation letter. The theme is a wealth builder for your future. I believe that may be associated with the Republic Wealth Trust that we are here to launch. But I think the message of a wealth builder for your future is quite instructive. In my previous life, I used to talk a lot about the essence of taking steps to create the future that you want through a disciplined culture of savings and investment. Many people talk about looking forward to a great future, but really that great future starts today, and it starts with what you do today. And you need vehicles, you need investment instruments that can help you. But the important thing is to have that culture of savings and investment so that you can secure for yourself the kind of future that you dream about. So indeed, even if a wealth builder for your future is associated with the Republic Wealth Trust that we're going to launch, I like to say that it's a message that transcends the product. In other words, everyone should be able to take steps to build wealth for the future. And there's only one way of doing that, and that's to have a culture, a habit of savings and investment. And that is where institutions like Republic Investments come in, where they give you vehicles or products to help you build towards your future. There's a 3-action phrase that I like using when it comes to building wealth for your future, and it goes like this: spend less, save more, invest your savings. Because when you spend less, you save more. But when you save more and you don't put those savings to work, you're not doing yourself any good. You need to put the savings to work. So we say spend less, save more, and invest your savings. So the question of investing your savings is, what product, what instrument can I use to achieve this goal of investing my savings? But let me repeat, the starting point is to learn to spend less. And this week I heard a very interesting description on radio. I was listening to one of the radio programs, and they were having a conversation about the kind of difficulty in the system, inflation going up, fuel prices going up, and all of that. And someone was giving an advice, and the phrase the person used was quite interesting, but it was basically geared to help people to spend less and in order to save more, and then to invest your savings. And the person says that don't buy champagne with palm wine salary or palm wine money. In other words, you must make sure that you tailor your expenses in line with your circumstances. But for me, the main point is, whatever you do, spend less. When you spend less, you'll be able to save more. And after saving, then the question is, how do I invest my savings? Now, over the last 2-3 years, we've had some cleanup exercise in the financial sector and in the asset management sector in particular. That's where I am concerned. And so you hear people saying that, well, is it safe to invest? Are there good investment vehicles out there? And my answer is yes, there are good investment vehicles out there. There are opportunities for you to channel your savings to work for you, to build for your future. And let me give you some statistics about the assets and the management in the asset management industry, just to illustrate the fact that confidence definitely is on the rebound on the back of the cleanup exercise that we did, and like Farid said, which has produced very strong and robust systems or organizations or firms in the industry. So with your permission, just let me give you some statistics, which to me tells a story, the story that there's confidence in investing. So if you are the only one who thinks that there are no opportunities out there, then you are missing the point. And if you have the opportunity to be part of this launch, this is another opportunity to know that there are credible investment vehicles out there that you can channel the savings that you make after you have spent less and then save more. So in 2016, the total assets under management in the industry, asset management industry, was 20.15 billion. That's the total AUM for the industry. In 2016, it moved up to 23.85 billion in 2017, then up to 28.31 billion in 2018. Then we did a cleanup exercise in 2019. In 2019, the total AUM remained at the same level, 28.3 billion. What it means is that because some toxic assets had to be taken out, even though there was growth, it still came back to around the same level, because in 2018 it was 28.3 billion. In 2019 it was 28.307 billion. So it might look like it's stagnated, but take note that 50 fund management firms lost their licenses, total assets under management in excess of 8.5 billion. Just to give you some perspective. Then in 2020, we record AUM growth of 30.58 billion. This is in 2020. Now, in 2021, as at the end of 2021, the total AUM for the industry had climbed up to 44.49 billion. Okay, so clearly you can see an upward trend when it comes to the total assets under management. Now let me narrow it down to the collective investment schemes. Now when we talk about collective investment schemes, we are referring to the mutual funds and then the unit trust. We are here to launch a unit trust. Now in 2016, the total assets under management of collective investment schemes in our industry was 1.13 billion. 1.13 billion. In 2019, I'm jumping to 2019. Okay, maybe let me give you the numbers so that you know I have it. I just wanted to jump, but let me give you the numbers. In 2017, it moved up to 2.17 billion. And then in 2018, it moved up to 2.45 billion. In 2019, it was 3.82 billion. And 2019 was when we did the cleanup exercise. Now, at the end of 2021, the total AUM of the CIS, Collective Investment Schemes, was 7.44 billion. Okay, so clearly, if I look at the numbers, I know, of course, I'll be the first to admit that when it comes to the growth in AUM, it's a product of capital appreciation and then inflows. I'm aware of that. But this certainly is not only from capital appreciation. So there is there's a certain trend of people putting money aside, I mean, the monies that they save, channeling it into investment, and in particular into collective investment schemes. Indeed, as a commission, we have given the indication to the market that we want collective investment schemes to be the default investment vehicle for retail investors. We have given the market guidance on who qualifies to be a retail investor and so on and so forth. But we are headed in the direction where if you're a retail investor, the vehicle that you can use to build for your future is a collective investment scheme. That's either a mutual fund or a unit trust. And I like to say that because we have signaled that we want the CIS to be the default investment vehicles, we have taken some steps to ensure a stronger or tighter supervision to make sure that the assets that these funds invest in, or the instruments that they invest in, is in line with what is in their scheme particulars and so on and so forth. But let me just highlight a number of things that we have done, just to let you know that we have taken steps to ensure that some of the challenges that emerged that led to the cleanup, we avoid a recurrence of those challenges. So we have, for instance, issued what we call a conduct of business guidelines. Now, what this particular guidelines does, and it has the force of law. Now, when we mention guidelines, some people think that it's as if it's a suggestion. It's not a suggestion. If you look at Section 209 of our Enabling Act 929, you note that guidelines have the force of law. So if you don't go by it, we'll come after you. So the conduct of business guidelines has provisions regarding, for instance, governance, corporate governance issues. And the lack of corporate governance was part of the challenges that we had. And we'd like to stress that the boards of the fund managers that we have licensed, where it's a mutual fund, the boards of the mutual funds. I'm happy Solis talked about what we expect of the trustees, but we have made the point that all the structures in where governance of the various investment vehicles are concerned need to be strengthened. because we want to promote the CRS as the default investment vehicle. So we can't entertain or allow things to be done, anyhow. It has to be done properly. So the conduct of business guidelines, it has a lot of provisions. For instance, if we talk about the composition of the board, you find that in there we stress the need for a certain number of not just non-executive directors, but independent non-executive directors. There are a number of provisions that we have put in there basically to help strengthen the practice of corporate governance in the entities that we have oversight of. Then let me also talk about licensing guidelines. Now, licensing guidelines, that's what determines who can get through the door and get the chance to operate in the industry. And we have tightened it, made it more rigorous, a lot of focus on the fit and proper principle. What it also means is that if you get through that licensing door, then it means that you have gone through some rigorous process. So, for instance, if we are here to launch Republic Wealth Trust, that means that it has gone through a certain process for it to be approved. But we have strengthened the licensing framework, and we have issued guidelines that contains some provisions regarding that. Then another guideline that we have issued is the investment guidelines. Investment guidelines. Of course, when it comes to CRS, collective investment schemes, we already have regulations that guide it. That's the LI 1695. But the investment guidelines that we have issued is broader, and it touches other funds that do not necessarily fall within the CRS space. But at the same time, there are some new things that we have introduced in the investment guidelines that we expect operators of the CRS, that's the mutual funds or the unit trust, to also bear in mind. One of the challenges that led to the cleanup exercise was the fact that there was a lot of related party transactions that didn't follow any particular order. So we have tightened things in the investment guidelines, and we expect that there will be strict compliance when it comes to how the market operators, including the collective investment schemes, go about the work that they do. When it comes to compliance, we have also elevated the role of the compliance officer. And again, we have issued some directives surrounding it, just to make sure that compliance officers have the necessary authority and the necessary access, to escalate issues that they would pick up. We have, again, in recent times, issued some directives on trust accounts. We expect all our market operators to ensure that they go by the directive in terms of making sure that customer money is deposited only in trust accounts and in no other account. We had issues of some people commingling operational funds with funds of clients. That's a no-no. It's actually criminal, and you can get into a lot of trouble if you get into that kind of conduct. But I'm just saying that we have issued guidelines. I'm just trying to highlight some of the things that we have issued, because once I have the opportunity to speak, I need to give the right signals, because people are concerned that post the cleanup, what do we expect? And I want to send a signal that we have beefed up our enforcement team, and we are keen on ensuring that these guidelines that we have issued, there would be compliance. If you think that we have issued these guidelines, it's been a year, you haven't heard anything from SEC, I'll say to just watch the space, because we'll be conducting an exercise to ensure that the various new things we've introduced in these guidelines, we have our market operators doing the right thing. I'd like to urge, again, all CRS operators, mutual funds, and unit trusts to please make sure you work with your scheme particulars. Again, our assessment of the returns that we have is that sometimes fund managers or operators, they depart from the scheme particulars, the asset allocation in the scheme particulars. And you have a situation where somebody says, I'm running a balanced fund. And then if you look at the spread of the assets between, let's say, fixed income and then equity, it doesn't look like a balanced fund. And if you go into the scheme particulars, again, you find that there is a departure. Of course, I'm aware, again, that there will be the need of rebalancing due to market movements and other things. But where it is a clear departure from going by the scheme particulars, that is a problem. And we are not going to allow that to continue. So I'll urge Madeleine and her team, please make sure that, I'm not saying that they are not, I'm just saying that keep your eye on it, make sure that your asset allocation or the structure of your portfolio is in line with what has been prescribed in the scheme particulars. And let me end this part by stressing to trustees and custodians that indeed we expect a lot more from you in terms of being that, if you like, third eye or third level of defense, because the essence of having custodians and trustees is to ensure that there is that segregation, in terms of who has access to the assets, so that you don't have fund managers doing all kinds of funny things. We don't want them to be tempted, so we don't want to lead them into temptation. We want to just make sure. But it's important, again, unfortunately, a few trustees, in a sense, kind of just sleep on the job. I mean, after signing the trustee agreement, it's like they leave the fund managers to do their own thing. That is not good. So I want to urge all trustees and custodians to please be up and doing and live up to your responsibility. And then let me also make an appeal to all members of boards. That's where you talk about the mutual funds. But where we talk about the fund managers, I want to urge the boards also to take their role seriously. I think if you look at the new the Companies Act, you know that there are some serious consequences, when it comes to the board members. And let me even put in this, that after we have done the cleanup, what we did was we did a revocation of licenses. But an exercise that we are doing, that we haven't brought it out so much into the open, is that we are actually bringing all the directors of the affected or the failed fund management companies, and we are taking them through a hearing process, for them to make a determination that they are not culpable or they should not be sanctioned in any way. So, there are serious consequences. So please, if you are a director, we have cases of people saying that, I didn't know what was going on. I wasn't even attending board meetings. I never saw accounts. All those things cannot fly in the face of the law. So please, if you're a director, whether a director of a market operator, fund manager, or a mutual fund director, please take your work seriously, because we would take you on if things don't go well. I think we can all appreciate the fact that this cleanup has been very expensive in so many ways, and we cannot allow recurrence of some of the issues that led to the unfortunate but necessary cleanup exercise that we had to take. Before I end, let me also comment about a certain trend that we are seeing and which is worrying, and that's the trend of having unlicensed products or unlicensed people selling products to, if you like, the unsuspecting public. And I want to say that when it comes to the securities industry, it is regulated activity. When we say it's regulated activity, in other words, you can't just get up and offer a product or service without the license, without getting the proper authorization from the regulator. So if you are in doubt, just come and clear with the SEC that, oh, this is an idea I have. And we have a few people who come to us, I have this idea, I want to do this. Does it fall in your area? What should I do? Because again, if recently I told my investigations team, I've set them on a certain path, and there are some people who are going to receive some love letters from me very soon, because we need to police the system in order to give confidence to capital. So I am making an appeal. Don't get into regulated activity if you don't have the appropriate license or if you are not authorized. And for people who fall for some of these schemes, especially what we would term Ponzi schemes or pyramid schemes, and it's a bit prevalent these days. People will say, pay this amount of money, and in a week you get this. In a month, I don't know whether you see some of this, but it's all over the place, and we get reports. And for me, it surprises me that in spite of all these things, people still fall for such schemes. It's very perplexing. But let me say that please do not fall for these unlicensed schemes. If someone promises you something that is too good to be true, it probably is too good to be true. And ask questions. Don't go in and then later expect to be bailed out by someone. Let's be more discerning and question these things before we get into situations where our hard-earned savings gets locked up in one scheme or the other. So let's all beware, especially those who are looking for those quick turnarounds. But let me end by saying that when it comes to building wealth for the future, to me, it's a shared responsibility. What do I mean by is a shared responsibility? I believe that the regulator has a role to play. I believe that the market operator has a role to play. But I also believe that the investor has a role to play. It's a shared responsibility. So let not anyone shirk his or her responsibility and expect the other person to do what they have to do. So for instance, the regulator's responsibility, you are to ensure a rigorous licensing process and an ongoing supervision. That we have to do, and that we are doing. We are committed to doing. We have even introduced a digital platform for market operators to submit reports to make us more nimble in terms of our receipt and analysis of information. That is that we have a responsibility also to make information available, give access to the investing public for various data that they may need to make informed decisions. It's our responsibility to take enforcement action whenever there's an infraction. So we will live up to our responsibility. When it comes to the market operator, it's your responsibility to ensure compliance. Compliance should be one of the things that you do not compromise on at all. Your responsibility is to ensure adequate disclosure to your clients. It's your responsibility to seek the interest of your client. Very, very important. But for the investor, I think sometimes there's a challenge there where people say, I dealt with this institution because it was licensed by the SEC. So it's like everything is is okay. The fact that an entity has been licensed by the SEC is not giving, if you like, a rating to the product that that entity is bringing. Okay, you shouldn't ascribe, merit-based regulation to what a regulator would do. What a regulator would do would be to ensure that the operator has got the necessary capital required, for instance, to operate, has the right structures in place, and so on and so forth. Okay, but when it comes to an investment product that the operator would sell, that product may have some risk-return characteristics that has got nothing to do with the license that was given. Because, for instance, if a market operator invests in, let's say, equities by its nature as an asset class has some risks associated with it. So the responsibility of the investor is to seek to understand the product that you are being offered. I think the error that a lot of people made was to just be chasing returns. Oh, who is giving me the best? No, seek to understand the product. Understand the risk-return trade-off, okay? So that if it's an equity fund, if you put your money in it, you must understand that the value of the money, it can go down, it can mark time, it can also go up. The fact that it marks time doesn't mean that SEC didn't do his work. What it means is that you probably didn't understand that the product offers this kind of potential return. I don't know whether I'm coming through. But so the responsibility of the investor is to understand the product. The responsibility of the investor is to ask questions. People don't ask questions. It's almost like, hey, your brother or your sister said, the thing is good, let's go. No, please, ask questions. Ask questions. If somebody is saying that he's going to give you 10% a month or a week, you must ask, what is the person investing in to be able to get his or her profit and still pay you that kind of return? If it's 10% a month, if you annualize it, that's about 120% a year. What kind of investment are you doing? Ask questions. But people don't ask questions. They say, SEC has licensed you. Please, it's a shared responsibility. I am at pains to make this point because the regulator will do his job. The market operator must do their job as well. But investor, please do your job. Ask questions. And then apart from that, monitor your investment and appreciate what is happening. And if you have a difficulty, it's also your responsibility to report to the SEC. So it's a shared responsibility. Let's all work together and let's make sure that we help people to build wealth for their future. I am confident that the Republic Wealth Trust, which from what I heard is a fixed income product, it will meet a particular need. And you must understand, so for instance, you have 4 other products, right? Don't say which one gives me the best returns. Understand what each product offers you. That's the key thing, your responsibility to understand. Because, for instance, you can use your emergency fund, use one particular fund for your emergency fund, use one for maybe a retirement fund, use one for maybe your project fund. You just need to understand the product and use it well. I am confident that Madeleine and her team will do a good job with regard to this product. And as I've said, from the SEC, we believe that the collective investment scheme should be the default investment vehicle. And I expect that we are launching it today. In the coming years, we'll see strong patronage so that when I'm reporting the AUM of the industry, and I'm talking about the CRS, maybe in 2022, I'll say we ended 2021 at 7.44 billion. By the end of 2022, it would be nice for me to say we ended 2022 at maybe 10.5 billion. And out of that, Republic Wealth contributed X%. I think it would be nice. And but if we all take our responsibility, as a regulator, I'm committed. We are committed, and we are doing all that we can to play our part. So please, market operators, you also do your responsibility. When the regulator comes to launch your product, it places more responsibility on you, because if you let the product, if you don't make it work, it's a problem. Because once I've come here, people say, hey, the thing is good. I mean, I'm not saying it's good. I'm just saying that make sure you do a good job, so that it becomes a win-win situation, because we want people to have confidence in investing in collective investment schemes. I think I've spoken more than I wanted to speak. Apologies for having to take so much of your time. But I believe we are set to do the launch. I'm told that when it comes to launch, there has to be something, maybe some James Bond sound, pam, or something, you know. I don't know what the plan is, but I'm ready together with the dignitaries to do the official launch of the Republic Wealth Trust.